You were listening to chartingwealth.com for Thursday, the 2nd of November, 2017. We see that the S&P 500 is up for the day, 0.14%. NASDAQ 100 down just barely, 0.04%. Bonds are up 0.22%, and gold is up 0.36%. First, let's jump into the S&P 500. We see that it is in an uptrend and has been since things started moving up on the weekly chart all the way back on the week ending the 1st of September, going on, 9-10 weeks now. So again, we do see, however, what appears to be a slowing for the first time since the weekly vertical crossover. We see that the price percent oscillator is going flat on us on the weekly chart. So far, we're just in day 3 of a 5-day candle. The weekly candle takes 5 days to complete. Of course, that's why it's called the weekly candle. And what we always want to do is we will look at it during the course of the week. But remember, a candle is not a candle until it closes, because it's always subject to change. We do see the derivative oscillators losing some of that upward momentum too. As we drill a little deeper into things, we see on the 2-day chart that it's totally gone flat. And moving, well, it's basically paralleling the red signal line. Derivative oscillators continuing to lose energy. Why has it gone flat? Because the price has been sliding sideways since really somewhere around the 2-day candle ending on the 20th, where it hit a peak, and really has waited until this latest candle that's been drawing here for the last 2 days to actually move above that and close above that. So again, we'll continue to watch and see what we see. Derivative oscillators continuing to lose energy. Let's take a look at what's going on. And because of that sideways slide, the 4-hour chart has just become basically laminated. The signal, or the red signal line, and the blue price percent oscillator moving across from each other. What gives us a clue is that the derivative oscillator is gaining energy. However, we ended the day with a doji, which means lots of indecision. Up move in the morning, followed by a retracement and a pullback in the afternoon, basically opening and closing around the same point. So again, all things being equal, the derivative oscillator is the only thing to tell us that we might have some up movement underway in the future, but we're not going to guess. We're just going to continue to watch. Now remember, since we have the weekly in a confirmed uptrend and the 2-day in an uptrend, if we do have a crossover going up on that blue signal line, you might want to jump into a practice trade going up on the S&P 500, with the caveat things do seem to be slowing down. Again, we've seen that happen over and over again, but this is the first time after a huge run-up on that weekly chart for many, many, many weeks. So just keep your eye on things. We'll continue to watch and see what we see. What's going on the Qs? The Qs, of course, we had a weekly vertical crossover going up back on the week ending the 27th. That was this past week. Jumping in point on Monday. As we move through Wednesday, what do we see going on? Well, we see the weekly chart continuing to move up. Price percent oscillators moving up. Derivative oscillator gaining energy. Looks nice. What do we see on the 2-day chart? We see a second 2-day candle with lots of prime, strong up movement. And then what do we see going on the 4-hour chart? We've been talking about that. Worried about it maybe topping out. Of course, what happened over the course of the day, moved up in the morning, down some in the afternoon, enough down movement in the afternoon for it to close down a little bit. So again, could just be retracing, actually digesting some of the gains. But again, keep your eyes sharp, keep them focused on that 4-hour chart. Just because it crosses over going down doesn't mean you have to get out ever, but you always want to make sure that you watch your 2-day and your weekly to see if that 4-hour chart crossing over is significant enough to affect them. But again, when that 4-hour chart does cross over going down, it will, of course, at some point. If you do get out, you can always get out and then jump back in after it crosses back over going up again. Okay, doesn't mean you have to get out forever. What you want to try to do, of course, is most wisely ride that trend. That's where we are, folks, as we close the day on the Qs. on Wednesday and go into Thursday, the 2nd of November. Let's see what's going on TLT. Start off with the weekly chart. See that we had a weekly vertical crossover going down back on the 29th of September. Big down week following that, then 2 sideways weeks. Big down week over the course of the past week ending the 27th of October. So far this week, a spinning top, a green open box doji. Derivative oscillators lost some of its downward momentum, as has the price percent oscillator. And again, TLT was up for the day. The 2-day candle, of course, we talked about this yesterday, blowing through the 2-day trend line, and now over the course of the latest 2-day candle has closed above the weekly trend line. If you were in a down move, of course, that spells some real concern, having blown through both of our trend lines. Hasn't crossed over going up yet, but appears to be heading that way. What do we see as we delve a little deeper into the 4-hour chart? Of course, that 4-hour chart has rocketed up, particularly since the 4-hour crossover back in the afternoon on Monday the 30th. It's continued to move up. Again, in the afternoon on Monday the 30th, it blew through that 2-day trend line. And then in the morning on Wednesday the 1st, blew through the weekly trend line and continued up past that. So again, keep your eye on things. Of course, you do not need to be in a down trade at this time on TLT. Cautioned you there, particularly when things started backing up and we had that 4-hour crossover in the afternoon back on the 30th with that strong up movement. So again, if it crosses back over going down and there's no crossover on either the weekly or the 2-day that are now in confirmed down moves, of course, you can jump back in using that 4-hour chart as your trigger chart. Now let's go back to the weekly and we'll check out the last chart. That's gold. What do we see going on gold? Of course, we had the weekly vertical crossover back on the 6th of October, went sideways for 2 weeks, similar to TLT, and then has been down over the course of the last 2 weeks, actually down stronger than TLT was over the course of this current week. We see that the price percent oscillator continuing to hammer down and the derivative oscillator continuing to gain downward momentum. 2-day chart shows us things are flattening out a little bit on the price percent oscillator and the derivative oscillator. This latest 2-day candle is a doji, a green doji, meaning indecision. Did not close above the 2-day trend line, got awfully darn close, still below the weekly. And of course, what is our most important chart when it comes to gold? That is the one that crossed over in the morning on Wednesday, going up. We warned you about that yesterday. Looked like it might be heading that way. And of course, that alone would trigger you to pull your down position at this point. Even though the weekly and the 2-day are still in confirmed down moves, 4-hour chart is so important. We like it when we can jump into a down move, as we did when we were triggered jumping into gold, of course, and that 4-hour chart is showing us that. But, of course, once we see things rotate back over, you, of course, can pull everything and go into an up move. We see the 4-hour chart, unlike our other charts, seem to just be this, and you can go back and please, I encourage you, go back and backtrace it and see how accurate over and over and over again this 4-hour chart is. The only time it will get screwy is when gold starts to slide sideways, as it did back in August from about the 15th through the end of August. Then, of course, it crossed back over, took off going up, and was beautiful. Remember, the thing about the price percent oscillator, it is very, very similarly calculated to the MACD. Because of the type of mathematical formula used to calculate it, it requires trending. If you start seeing any ETF or stock that you're tracking on the PPO or the MACD going sideways, you start losing control of being able to use that oscillator effectively. So again, what do? You're not a professional trader in the sense that you're in New York and you have to trade people's money. You can just wait. You wait until the charts get good. When do you trade? When the charts tell you to trade. You never force a trade because you can't make the market do what you want it to do, no matter how much you think you can. The market's going to do what the market wants to do. That's why we trend follow, we don't forecast. Folks, you want to know more about what we do? Go to the website, chartingwealth.com. Sign up and receive every day our daily market reviews. Also, if you subscribe, you will receive for free our How to Read a Stock Chart video. You'll get the freestockcharts.com layout that we use at Charting Wealth for free. You'll also get our daily market worksheet, our weekly market worksheet, and our trade worksheet. Use all of those along with this broadcast to make sure that you are learning everything you can as thoroughly and rapidly as you can. We appreciate you being with us. We always love to hear from you. Please write us cw@chartingwealth.com. We do all we can to answer your email questions, queries, and concerns. All the best from the entire team here at Charting Wealth World Headquarters. God bless.